Hey, how's it going, everyone? Welcome into another live stream, and it's an earnings report discussion with me and Mia Hilson. Thank you very much for joining in, and I hope you all have a really nice day. Today we're gonna actually talk about one of my favorite retail companies, and you guys should know the brand. It's called Revolve Group, and what they do is they sell a lot of retail clothing. Okay, so retail clothing, more specifically to women in a way, and I like their products. I mean, it's not like I bought their products, but I've heard from some of my female friends, some of my girlfriends that it's very good quality and it's worth buying because they do have a lot of really nice product, and even though it's not affordable in a way, it's quite impressive with the amount of quality that they have. So I will quickly go to the page, and hello, the cow pile, I love your name. Thank you very much for joining in. Thanks for hosting on YouTube. And I like to always do my earnings report, the live reaction on YouTube, because that way I can get more viewers in a way, and just I love the live discussion if it's possible in a way. So that's what I like to do, and even though if it's just one viewer or not, it helps in some way, because having a discussion, it's the most important part. That's how I feel it. So yeah, the cow pile. It seems like you're a current investor in this, so we're gonna go through each of them together. Let's go through the results as well as just go through the results and live reaction to it. And so let me know, when did you invest in Revolve, and what are some of the reasons for investing into it? That's what I love to know. And as always, during these earnings call, I get so thirsty because there's so much talking. So much talking. Yeah, way too much talking, and that makes my throat really, really dry in a way. So let's do it. Let's get to the numbers, and I am so excited. I am just super, super excited. Let's go. Here we go. But let's put some music on because it's kind of boring without music. So you've been in Revolve since November of 2020. I always go to the balance sheet first, and they're financially strong, low debt. So when you invested in them in 2020, last year November, they're around $27. Okay, so that's actually still pretty affordable price. And how did you first hear about it? And you know what? I don't want to say this, but I also have some shares as well. I've been invested in them since the summer. I think it's May or something. So I bought it when it was around $13. So I've been holding really strong since then, because I feel like this is a really generational company in terms of retail. That's why I feel, like you said, their growth prospects is absolutely huge. Their total addressable market is big as well. They are a generational company in that they're able to attract a lot of businesses from Generation Z and millennials. Yeah, so that's one of the reasons why, as a long-term investment, I see this company being very important to the retail industry. It's quite important now, but I see it in 5 to 10 years as this company not even this is going to be one of the most talked about retail companies 5 to 10 years, and a lot of girls are gonna definitely go to this brand for its clothing. Yeah, growth prospects are also pretty good, and their stuff is overpriced, but there's also a lot of people buying this, even during pandemic times. Exactly, because it's shown in the sales report that even though, they don't have any discounts, they did no discounts, people are still buying. That shows you brand loyalty as well. So, what do I have? What does analysts have? This quarter, they predict 21 cents of revenue. And I'm not sure how much that is in net income because I can't look at it in net incomes, but here's my prediction. I put $30 million in net income. The revenue on average is 198 million compared with 200. So mine's a little bit higher than them. And when you look at their active customers, I believe they're gonna have a little bit more growth, 1.6 million compared to quarter over quarter. And their orders placed for each customer is 1.3 million, a nice growth as well. And average order value, I would say it's also increasing as well. So always when I do an earnings report, I always like to do my own numbers as well. That way, you don't always rely on analysts, right? It's nice to rely on analysts for some parts, but you should, if you're a fundamental investor, let's say if you're a fundamental investor, you should have your own predictions as well. Anyways, let's get to it. We see it down 10% after hours. Wow, okay. If you look at that baseline number like that, you down 10%. That means it's a terrible earnings report. It's a terrible earnings report. But let's see what it is. Let's take a look. Here we go. Okay, let's go. We delivered record quarterly net sales in the second quarter of 2021, highlighted by growth of 60% over a year and 41% over the second quarter of 2019. A meaningful acceleration from 30% growth reported for the first quarter of 2021. Okay, that first line was very strong. That's very, very strong. Okay. We also achieved record net income of 32 million. Oh, I'm pretty close. Or 42 cents per share, an increase of more than 100% over the 2020 and 2019 second quarter. You know how they always like to do 2020 and 2019 because 2019 is, pre-pandemic, 2020 is pandemic, right? And generated 33 million in cash flow. Woo! That's very nice. Our exceptional second quarter was driven by new customer additions. That's what I was talking about. How are you going to grow in terms of new customer base? And unprecedented numbers of reactivated customers who hadn't purchased for us in several quarters while social events were on pause. This means that with social events coming back, a lot more customers are coming back to spending more money, specifically on Revolve. Having that confidence in I can go to social events again. Time to buy some more clothes. We delivered robust growth across all businesses, including domestic and international markets. Powerful driver of our revenue growth was further acceleration of our Forward segment. So remember, they have two types of businesses, right? Their main brand Revolve and also Forward, which is more of designer brands. And that grew pretty big year over year. So, net sales, 228 million, beating my estimates as well, beating Yahoo Finance's estimates as well. By how much? By a lot, even beating their highest estimates. Okay? Wow. And you telling me this company is going down after ours? Well, doesn't matter. I invest in this long term, and I know long term wise this is going to be amazing. 228 million, year over year change, 60%. Gross profit, 127 million, 77% change year over year. And net income, I love to pay attention to gross margins as well, because that's how profitable of a business you are. And 55.6% is a great improvement year over year. That means even though you aren't giving much discounts, people are still buying your People are still buying your clothes, and you're still able to earn good margins out of that. Net income, a nice increase as well. You know, this company is now profitable, right? They've been profitable for the last year in a way. So yeah, now it's just about how are they going to add more into the net income and what they're going to do with the cash. Yep, and you're right, Q2 earnings per share was 42 cents. Should be like what they said here. Where is it? You're right, right here. Yep, beating analyst expectations as well. And that's pretty close. Hey, that's pretty close on the net income. 30 million? Really close. So that was a pretty good one. Gross profit. So we talked about that. Adjusted EBITDA. I like to focus on free cash flow. So that was a drop of 38%, like you said, over 52 million. And I'd like to see what management has to say about that. You know, what the big drop, exactly what happened with it. Now they said that there was more active customers now. So compared to quarter over quarter, I had 1.6 million, so I was close as well. A nice, it's like a decent, modest growth in a way. Orders placed. Oh, that's pretty big. That's pretty big, honestly. There's a lot more orders placed because compared to a quarter one, 1.28. There's 1.76 now. So customers are buying a lot more, and on average. And then the order average value is about 255. Same as the first quarter. Okay, so they're not spending more, but they're buying more items in a way. Yeah, they're still spending on average the same. So let's talk about that. So let's first talk about revenue. 228 million is amazing in itself. I think that's pretty impressive. So yeah, I'm not worried about this company expanding even like more, because they're gonna continually to expand and continually beat analyst expectations. And you know, this 10% selling out, right? It's actually the big institutions. You know why? Because you look at this. Look at the ownerships. What the? I thought I signed in today. Didn't I not sign in? I thought I signed in. Ugh. Anyways, I thought I signed in today. That's just weird, because this allows me to access like a lot of the things. So let's hold on. Let me quickly do this first. So great question. You're asking me what is my exit strategy on Revolve? The thing is, this company, they haven't disappointed me at all. They really haven't disappointed me. So when you talk to me about exit strategy, I only sell out of a business if I see that their growth is no longer happening. And as long as you see growth in this company, it's tremendous growth that they're going through. So until it reaches a point where it's kind of like really conservative growth, that's when I sell out. That's when I know it is time. You know, the company is constantly reinventing themselves, so there's no way I am going to sell out now. Like, my prediction is that this is going to be $100 company in the future, you know, down 2-3 years down the road. And they do have the numbers to back it up. Okay? Right now they're worth about how much? $5 billion? Can they get to 7.5 billion? No doubt, no doubt. You know, probably the highest they will ever get to is probably 10 billion. 10 billion, right? 10 billion, it's still like a medium-sized company, but they do have the potential to reach there. And if you talk about 10 billion, that's about $150 or $140 in share price. That's like 10 times my investment. And I believe this company does have the potential to do that. Will they? I believe in them. That's why I haven't sold out yet. Because the long term, it's such a tremendous opportunity. It's hard to find a company even like this. Even a retail company like that. So I'm a long-term investor. You know, maybe you're short-term in a way, but I view this as a long-term investment. And that's why I'm sticking with it. Even with this 11% drop off, I'm not worried at all. Okay. Sure, I'm not. It's this 11%, like I said, look how much of the private companies and institutions own this. 48 plus 48% equals about 90 something percent. And look at the general public. We are the general public. We only own 3.5% of this company, okay? That's how much institutions believe in this company as well. And so if institutions are selling out, sure, I don't mind. I really don't mind. They think it's overvalued in a way, sure. But later on, they're going to buy back. And they're going to regret selling it now. So the cow pow. Have I thought about streaming on Twitch? So I've actually received a lot of recommendations to stream on Twitch, but I think I want to expand on my YouTube channel for now. So thank you very much for joining in today. Like, I think having viewers like you is important, and I just love talking with people like you guys for every earning support. So first I want to expand my YouTube, and then later on focus on Twitch. Yeah, and that's what it is. I did my advertisement on Yahoo Finance, right? I did my advertisement on Yahoo Finance. I do that for every report that for the companies that I am invested in. So thank you for joining in, just clicking on it, because that means a lot to me as well. By the time you figure out the growth is slowing, wouldn't it be too late? You know, it's hard to always time the market. That's why, right? But knowing the current quarter and stuff, like it's now, this year is not the time to be selling out, nor or even next year, because when you know the coronavirus is, you know, it's going to be gone soon, right? And you know social events are coming back. It'll take a year or two. 2022 is the year that every social event probably come back, right? That's when you know this is gonna hit its even higher peak in sales. So no, it's hard to time the market, but if you kind of have an idea, then you won't regret it, right? How does institutions own 102%? Let me check that out in the statistics. Yeah, obviously it's wrong. There's no way like institutions could hold more. So that's why I use something called Simply Wall Street. You just simply make an account like that, and they have pretty in-depth details as well. So yeah, look, private companies and institutions, that's about 95% that they control, right? And so this big drop off is these big boys, these big fishes running and swimming away from this company, okay? I'm still here. Hey, I'll be here next year as well, okay? I'm not selling out, okay? And when I sell out, those big institutions are gonna have to pay a lot of money for my shares, okay? And you're exactly right. Yahoo Finance is wrong, because my average cost is $13, and I invested about $3,000 American in it. So it's a decent amount, and it's grown a lot. It's grown to like the 10,000s at the moment. So if people are like, you're crazy, why aren't you selling out? It's because the growth, they've consistently shown that they can improve and reinvent themselves. They handled the pandemic very well. and that gives me confidence that they're gonna thrive even more during the peak of social events, the return of social events. Anyways, let's go talk about gross margins. Gross margins benefited from a healthy inventory and consumer demand during the quarter that contributed to a record high of net sales at full price. That's what I'm talking about, right? You have a good amount of inventory and not that much discounts going on. You still have consumer demand for your full price items. See, year-over-year decrease in the depth of discounts, partially offset by a lower contribution from own brands. Net income 31.5 million. Impressive. Yeah, and then your earnings per share 42 cents. Obviously that's similar to net income. Tax rate, don't really have to worry about that. Okay, let's look at Revolve segment. So it's $188 million. Year-over-year increase of about 49%. That's good. But what they really talked about was their forward segment, right? So if you go on Revolve website, you look at the forward segment. Forward segment. Where is forward segment? Forward. Right? These are the even more costly items with the main, luxury brand designers in a way. So these stuff, this expansion of 100 and what is that? 100 and oh, come on. 151% shows you that, middle to high income earners aren't afraid to buy clothes like that. They aren't afraid. And they have confidence that, I can finally go out again. I can hang out with my friends. I can go to social events. It's huge. You look at their domestic net sales, 59% year over year, as well as expanding internationally, 63% year over year. Huge as well. Huge. Because this is not just a North American company, but also if you're able to get international attentions from Asia, Europe, that will help your brand even more. Okay, let me read your question. Although this drop is raising my eyebrows, I'm still gonna hold. Good choice. I'm not a financial advisor, but I agree with your choice. I like that. What kind of equities do I normally cover? Yeah, so a lot of companies I'm currently invested in, if you go check out my channel, most of them are actually small capitalization. There's only a few that's kind of large, one or two. Yeah. But mainly, my biggest position is in a marijuana company, and it's only about 150 million in market capitalization. Yeah. Literally a penny stock. But it doesn't have the qualities of a penny stock. It makes sense. If there's no growth, why exit? Yeah, and I agree with you. And then whenever you want to consider selling out of a stock, think about the reasons why you invested in it, right? And the reasons why you are going to sell out, okay? So, let me show you my channel in a way. Yeah, so I actually do a lot of finance classes and stuff. So I have my own introducing my own finance class where I try to teach people about finances, about stock investment, and yeah, hopefully you can check it out because I'm recruiting students at the moment. I'm trying to get more clients. It's very affordable, and most importantly is I want people to learn how to invest properly, and that's what it is. Yeah. Okay, what is next? So yeah, thank you. Thank you for joining in, and I hope to see you on my other videos as well, or maybe you can join into my Discord. We can talk about other things as well. If you have troubles with any finance related areas, maybe I could help you out. That's my job in a way, or that's something I love to do. Okay, net cash provided by operating activities was 33.3 million. and free cash flow is 32.8. The 8% year-over-year increases in net cash was achieved despite a difficult prior year comparison and meaningful inventory investments. So is that why it's kind of lower? They had a lot of inventory investments during the first half of the year. Obviously, their balance sheet is just as strong as always. Don't really need to read too much about that because they don't have much debt. Yeah, the big gets even bigger. That's what it is. Inventory increased 18% year over year. Going forward, we intend to increase our investments in inventory efficiency and also our inventory position to support consumer demand. And that's fine. If you want to use money to do that, definitely. Just wondering, am I Canadian? Yeah. On my channel, if you go to my info, I'm Canadian. All right. Look, where am I? I'm in Canada. I'm in Vancouver. So, not sure if you heard about Vancouver, but one of the most popular cities in Canada. So, let's see what management has to say about their outlook. Our strong growth continued into the third quarter. Okay. With net sales in July, so last month, increasing more than 40% year over year, and on a 2-year growth versus 2019. Overall, we're encouraged by the pace of reopening and economic recovery across US and in many of our key international markets. We've continued to expand our in-person marketing events with appropriate, safety rules, successfully hosting marketing events in these countries. We plan to invest even further in additional marketing events and programs in the future to continue to build our brand over the long term and take advantage on the reopening opportunity. However, we remain cautious as the Delta variant could do something. That's what I'm trying to read out. Yep, and so nothing new that I already don't know in a way. Now let's look at more stuff down there. Oh, there it is. Net sales and all this stuff, marketing. They spend a little bit more. Obviously, they need to because, reopening, right? The reopening play. Net income, impressive. See what else is new. What else costed more sales? Gross profit. Yeah, they spent a little bit more on marketing, which is reasonable. The distribution channel and inventory, they invested a lot in that. That's probably why net income wasn't as high in a way. But I'm not too worried. I am really not too worried. All right, they already did terrific on net income. You are from Toronto. Hey! I would love to go to Toronto. Where in Toronto are you from? Ontario? London? Brampton? I do have a few viewers from Ontario as well. One of my loyal viewers. He's from Toronto. So, Toronto is a good place. And you did bought into the very good food company. Ooh, nice. And how did you figure out what's the very good food company? Like, how did you know about it? And what made you want to buy into it? And nice, Toronto. I love. And what is your name? Instead of calling you the cow pile, I think it's better if I just call you, by your name in a way. Like, what is your name in real life? What is your name? Yeah, this total operating expense was pretty big. Look at that. This is what really ate net income. But that's fine, because they did terrific. Look at that. Their net income increased about 100-something% year over year. And for a company to say that, that's a special company in itself. Assets, liabilities, I'm not too worried, honestly. And if I'm just looking at that, yeah, a lot of assets, good cash, no debt. Good. Continue expanding. Use that money. That's what money is used for, right? Nice. The Revolve segment and the Ford segment is pretty huge now. Revolve is back. Revolve is back. Revolve is a revolutionary company as well. In my eyes. Yeah, and Eric. Hey, thank you, Eric. Thanks for hosting and I subbed to your channel. Thank you for your subscription. But most importantly, it's thank you for your participation in this stream. And also in the future as well. So I look forward to seeing you. And you can join into my Discord if you want. It's in the video description. So join in or whatever. You can talk with other people in a way. And look forward to talking with you in the future. Videos, Discord, and also future live streams. Thanks, Eric. See you later. Take care. Gross profit. Nice. Alright, and they talked about international expansion and how it's getting even bigger and bigger. Yeah. Nice. Getting bigger and bigger and bigger. United States, 185,000. That's a nice expansion. Rest of the world, internationally, almost close to doubling. Good. Yeah. Gross margins, terrific. Free cash flow. This was huge. Last year maybe it's because the marketing and all, like all the inventory investments. Not, like I said, not worried. Not worried at all. Yeah, this is good to see. Domestic and international expansions are what you want to see in a growing company. And that's really about it. Oh, gotta listen to the earnings call. 50% of the job is done. The other 50% is in the earnings call. Because there's so much information that's important there. Like, there's a lot of smart analysts that ask you these questions, okay? And they ask about, like, exactly what was the strategy, what are some of the challenges, what did they see as guidance. Don't forget to do that. And that's why doing a clear review on earnings report is not just about reading their financial results, but also listening to a conference call. Very underrated thing that not a lot of people do, but very important as well. So yeah, other than that, I think I'm pretty good. Let me see if I can join into the earnings call. I would like to join in. Eric. Thank you. So, like, doing these streams, you're gonna meet new people. Like today, I just met Eric. Press release. Like that. Presentation, webcast. Oh, I think it already ended, right? Like, it ended already, or is it still happening? Oh, it's live still.
You to build up that home brand platform.
Great, thanks a lot for that, Jess.
Yep.
Crap, I missed out.
Your next question comes from the line of Edward Yaruba from KeyBank Capital Markets.
Okay, KeyBank
Your line is
Capital.
open.
Hey guys, thanks for taking the questions. I guess first you kind of disclosed that you were starting to see some of the expected difficulties with the iOS transition. I guess any kind of color you can drive into that, and has it driven a significant fall off in performance from those devices? And then I think you guys also indicated that units were down. Just kind of curious what underpinned that, given the overall strength of the
KeyBank
business. And then
International
finally,
Leadership.
we've noticed that there's a higher number of pre-order on the site. I guess kind of how should we frame that in context of the overall assortment, and is there any risk to breakage on pre-orders? Thank you.
Sure. So I'll take the first part of that question and then pass it off to Jesse. So with regards to iOS advertising, we started to see the impacts towards the end of the quarter. We didn't really see the impact initially when the transition first happened. There was a very definite impact. I think the good news is the overall strength of the business more than offset that impact. And also we saw within the iOS channel, the impact was very big in, call it, sub-segments of the channel that are more
Anyways,
targeting dependent.
I'm done.
And then we actually saw the losses there offset by
My job is done.
areas that
So, gonna listen to that later on.
I think it's still an evolving situation.
Tomorrow,
We'll see how it plays
looking
out.
forward to MP materials.
It has some impact.
I love it.
Likely,
Love this.
but
So yeah, thank you all for watching, and I'll see you all very
it was
soon.
a whole kind of